We are doing sum of May, June 2023, paper 21, which is related to the manufacturing accounts. Are you with me?
Yes, miss.
And it's question number 4. Can you read the question for me?
Salman owns a footwear factory. He sells to all of the 3 local shoe shops. Salman prepares his financial statements to 30th April each year.
Hmm.
30th April 2023, Salman's ledger account balances including the following.
Okay.
Inventory at
So this is the sum of manufacturing accounts. Now you have to do the markings. So one person will give me one markings. Mahad, is
Okay.
that fine?
Yes, miss.
Okay, fine. Go ahead. Start with Fatima and then Mahad.
Okay.
Inventory at 1st May is opening. Raw materials are direct materials consumed.
Yeah, work in progress. You added to manufacturing cost.
Finished goods is income statement.
Purchases of raw materials is direct material consumed.
Purchases of finished goods, you add it to the income statement.
Yeah, wages. Factory supervisor is factory overheads. No, it's income statement.
It's factory overheads.
Okay.
Anything that is related to the factory will come in manufacturing account. Okay?
Okay. Yes.
Factory operatives is direct labor.
Rates and insurance is other expense, but other expensive.
Factory electricity is FOH.
General factory expenses is factory overheads.
Do we record this anywhere?
Yeah, factory overheads.
Yeah, factory
What
overheads.
of this?
What?
We first
We find the
calculate.
depreciation.
Yeah, we have to find depreciation and they will give us information about depreciation. Okay?
In additional.
Come on. Come on, balance at bank.
SOFP.
It will not come in manufacturing account or income statement. Okay.
Yeah.
Go ahead. One person, one thing. Fast.
Closing, raw material is DMC.
Plus or minus?
Minus to the DMC, minus.
Okay.
Work in progress. On the last date, we subtract from manufacturing cost.
Yeah.
Then subtract from income statement, finished goods.
Okay.
Yeah, Salman applies a markup of 50% to his cost of sales. So basically, we could find out the gross profit with this.
Okay.
Yeah,
It is 50% on costs.
yes.
So if gross profit is 50% on cost means what?
So 50% of the 50% of the
50%
what do we say?
means half on
Cost
cost.
of sales. 50%
Just
of the cost
it
of
means
sales
I
is
can only
gross profit.
derive this. It is half on cost.
Yeah.
Okay, I cannot derive anything more than that.
Mm.
Okay, read ahead.
Rates and insurance are to be apportioned 3/4 to the factory and 1/4 to the office. So 3/4 times rates and insurance is over to the factory, which is FOH.
How much?
And then,
Okay, I will just write like this, okay?
yeah, okay. And 1/4 to rates and insurance is other expenses.
Okay, very good. Come on, ahead.
Yeah. At 30th April 2023, factory electricity of 1048 was unpaid.
What
So
will I
we added,
do? Okay. This one,
Factory equipment is depreciated at 20% and I'm using the reducing balance method.
okay.
So factory equipment at cost minus depreciation, provision for depreciation times 20%.
90,000 minus 43,920 into 20%.
Times 20, yeah,
So how
and
much?
it's factory overheads.
How much?
90,000. I'm getting 9216.
Hmm?
9216.
Is it correct? Yes.
Yeah.
yes,
So we know what goes under direct material consumed. We know what goes under income statement. We know what goes under FOH. Now, what is our format?
starts with direct material consumed, then direct labor, then direct expense, which gives us the prime cost. Then we add factory overheads, which gives us the manufacturing cost, and then add opening work in progress and subtract the closing work in progress, which gives us the cost of production.
So I think this should be fair enough. You all would be able to do it yourself. So I'll give
Yeah.
Yes.
you time. Please do it. We'll do this sum together. Okay?
Sorry, miss?
We'll do this sum together.
Okay, no problem.
Okay. So first we will write what direct material consumed.
Yeah, purchases of raw material.
First you direct write purchase of raw material.
No,
Opening
opening
raw materials,
raw
inventory of
materials.
So opening inventory of raw material plus the purchases of raw material
Yeah, 8190.
minus the closing inventory of raw material.
yes,
Opening inventory is 8190. Purchases is 78
788420.
minus closing inventory is 8,000. Are you with me?
Yeah,
yes,
So what is your DMC?
uh, 78610.
78610. So you have direct material, then you have direct labor.
yes.
What is your direct labor?
Direct labor is factory operatives. Miss, do we leave a line?
I leave it for presentation. I like beautiful work.
52.
Okay, miss.
52,396. So we have direct material, direct labor, and direct expenses. We have two things that
131.
comes under direct expenses. What are the two things that comes under direct expense?
Royal Special Plant, hire of special
Royalties
plant, I
and
mean.
hire of special plant.
Yeah.
Okay. So what is the prime cost?
131,006.
Miss, we don't write the detail for the direct labor,
You can write.
but if we don't write, will they reduce marks?
If it is one, then no.
Okay, miss.
Then factory overheads.
Hmm.
Factory overheads.
Hmm.
Um, Factory supervisor, 27,500.
1 minute. Come on, go ahead with factory overheads.
Yeah,
Factory
so
supervisor,
Hmm.
27,500.
Hmm.
then factory electricity,
Then factory supervisor.
then
After
factory
that,
electricity.
rates and insurance has a bifurcation. Can you see that? Yeah.
So 3/4
So
times
I'm going to rates
17,528.
and insurance, and I will write 17,528 times 3/4. So this makes
So
it 13,146. After that,
factory electricity,
how much?
11,442 plus 1,048,
Hmm.
which is 12,490.
Okay. Then
Then factory equipment at cost, factory equipment provision for
general
depreciation.
factory expenses.
Oh yeah,
General factory expenses.
8,244.
Hmm. After that,
Factory equipment,
depreciation of
90,000.
factory equipment.
Yeah, 90,000 minus 43920
Yeah, you
times
can show the
20%.
working over here. 90,000 less 43,920 times 20%. So 9216. So your total of these expenses would give you what? So your total factory overheads is coming up to 70,596. When you're deducting it, you get 201,602. This is which costs?
Manufacturing costs.
Manufacturing costs.
Miss, how did you get 70,596?
You
You
sum all
add
this. Add all your factory overheads. Yeah.
Are you sure it's 70,000?
Yeah, 27,500 plus 13,146 plus 12,490 plus 8,244 plus 9,216.
Okay, miss.
So in your manufacturing cost, I will add what? Opening
Opening work in progress.
opening work in progress.
minus the closing work in progress. You could add and then subtract, or you can just directly even do it. 15,200 and closing work in progress is 16,100.
15,200.
So this is going to give you 200,702. Are you with me?
Yes.
Okay. So with this, what is this 200,702? Can you tell me?
Cost of production.
This is the cost of production. Where will this cost of production go?
Income
The
statement.
income statement.
Okay. Here's the topic of your income statement.
Revenue.
Revenue. Do you have revenue?
No.
For what I have read, I have not seen any revenue. minus revenue less what?
Minus
Cost of
cost
sales.
of sales.
Cost of sales is made up
Opening inventory.
of
Finished goods.
how much?
It is 23,860.
23,860. Add what?
Purchases of finished goods. 9144.
Add cost of production. $200,702. Are you with me?
Yes, miss.
What is the total of this? 314,706. Less. Come on, less what?
Closing inventory of finished goods, which is 24,590.
How much?
23,590. 24,590.
So this will give us what?
The gross profit.
Cost of sales.
The cost of sales.
Oh, yeah.
What is the cost of sales? Yeah. Yes.
Yes.
Now I know that my revenue minus cost of sales gives me gross profit.
Gross profit is 145,058.
Mahad, wait. We need to know how you arrive at conclusion. I'm recording, right?
Yeah,
People should understand, right?
yeah. Yes.
So revenue minus cost of sales gives me gross profit.
Yes.
Do I have the gross profit? Answer no.
No.
No. Do I have revenue?
No.
I don't have gross profit. I don't have revenue, but I have some information that is given to me over gross profit. What is that information?
50% on markup.
On cost.
Yeah.
50% on cost means what?
Half on cost will give us the gross profit.
So it is half on cost. Cost is 290,116. So this is going to give me my gross profit. How much?
145,058.
So if I'm going from down to up, I will get my revenue as well.
Yeah, so we'll add it.
Huh?
So we'll get 435,174.
435,174. So this gives me my revenue. Are you with me?
Yes. Yes.
Come on, go ahead. Please read. Mahat.
Yes, miss. Salman is considering converting some of his office space into additional factory capacity. Advise Salman whether he should convert some of his premises from office use to factory use. Justify your answer by providing arguments for and against this conversion of office space into additional factory capacity.
So if he converts his office space to factory,
Yes.
if he is converting office space to factory, what is advantages?
No need to pay for extra space. We
Okay.
just And also he could like if the office space is
He will save expenses, so it's
he'll
more
save yeah his
okay.
expenses will reduce, yeah.
If you see, he had also purchased goods from outside, so he will no need to purchase goods from outside. So there will be no purchase of finished goods needed. Yeah.
Miss, I didn't understand.
Over here, he had purchased goods, finished goods from outside.
Yes,
So if he converts his office space into factory, he will produce more.
I guess, yeah,
He
okay.
will produce more. He will buy less from outside.
Yes,
Okay. So he will not have to pay extra rent. He will be extra profitable and he might not need to purchase finished goods from outside.
yes.
What is the disadvantages of converting
His,
office to factory?
his office uh will be smaller,
Okay, office will be smaller, so what?
so less work can be done in account like office, so like
So there
accounting,
will be less space for office work.
yeah.
Okay. I need only 2 points. What is the
Second point,
disadvantage of converting office to factory? Someone tell me what is disadvantage of converting office to factory? Conversion may be costly. Yes,
how?
you are going to convert an office into a manufacturing thing. So you will have to
Okay.
wipe off the tables, benches, and extra machines may be required.
Yeah, but then won't he earn more profit because he's producing more?
But capital expenditure will happen, right?
Yes.
Production will happen later, but currently capital expenditure will happen.
Okay, I guess, yeah.
Okay. So what do you advise him? We advise that he should convert it if he has a lot of things, a lot of finished goods to be produced,
Yeah,
uh,
Messi, his purchases of finished
and he
goods is
can
very high.
manage the office expense. He can manage the office work.
Yeah,
Okay.
I guess.
If you can give any
Yes.
suggestion, at any advice you can give him based on one conclusion. 5 marks or 2 points for and two against. So with this, we finish question number 4 of May June 23 paper 21, which is manufacturing accounts.
Yes.